The RBA has been raising the cash rate in response to rising inflation. With rising inflation, consumer confidence is declining and house prices are falling as well. So the question is, how high will interest rates rise? The RBA raised the cash rate by 25 basis points in May and by 50 basis points for 4 consecutive months from June to September. This was followed by 25 basis points in October and November. This December, a rise in the cash rate by 25 basis points. With the rising cash rate, homeowners with mortgages are now concerned about how high the interest rates will rise in 2023. The good news though is that Australians have jobs. The unemployment rate in Australia is now at 3.5%, and it's at its lowest in so many years. People are finding jobs, gaining more hours of work, and receiving higher wages. Unemployment rate is expected to move higher through 2023 and reach 4.5% in the second half of 2024, according to NAB economist Alan Oster. On a positive note, the economy has remained very resilient despite high inflation and a rapid increase in interest rates. Many households have also built up large financial buffers, and the saving rate remains higher than it was before the pandemic. Here are what the Big Four banks are saying. Westpac predicts rates to go as high as 3.85% by March 2023, while ANZ forecasts the cash rate will take a little longer to peak at the level in May. NAB forecast is a little more conservative. It expects the interest rate to hit 3.6% by March 2023. CBA expects interest rates to hit 3.1% by the end of the year and remain steady for the first half of 2023. So what should you be doing now that you know that interest rates may rise next year in 2023? First thing you should do is speak to your mortgage broker or to your existing bank. Negotiate for a better rate with your existing bank. Speaking with the broker about which loans will suit your needs could not only lead to a good financial outcome but can also provide valuable peace of mind. Tip number 2, you can refinance your home loan. If your bank keeps on increasing your interest rate, perhaps it's time for you to actually look into other lenders or other banks. Most banks are actually fierce and are competing for your business. So they are actually offering cashbacks right now ranging from $2,000 to $6,000 for you to move your home loan to the other banks. And so refinancing at this stage makes sense, but speak to a mortgage broker and find out if this is something that you can start considering. Tip number 3, prioritize paying off those high interest debts. I think the first thing I could think of is your credit card. If you have credit card balances at the end of each month, perhaps it's time for you to actually start looking into paying out these credit card balances. Credit cards attract an interest rate more than 20%, above 20%. So if you think about it, if you pay down these credit card balances, it will actually improve your cash flow. Especially now that mortgage repayments are rising, and of course it's eating up into your budget, and of course living expenses are also rising. So by paying down those credit card balances that you're not able to pay out each month, try to pay them down and pay it out as soon as you can. Preparing for future rate hikes as early as now will put you in a better financial position in 2023.
My name is Maria Papa. I've been doing mortgage broking in the last 11 years. My number is 04301-44008. You can email me at mpapa@maverickfinance.com.au. You can check out our website. We're on LinkedIn, we're on Facebook, we're on Twitter, we're on Instagram. Just Google us and you'll find us.